Welcome to yet another class on Account 202, Financial Accounting and Reporting 2. Today we shall be talking about estate agent account, which is also known as building society account. Estate business involves management of landed properties, which include the land and any building or property on it. The idea for accounting for any business is the same. The sustainability of any business depends on the state of its financial performance and financial position. Thus, the need for a statement to show its financial performance and financial position. The format for this statement, the trial balance here, you see it's presented in T format. All the elements are arranged in T format, and you can see that all the elements on the right hand side of the trial balance are capital. The way it is being arranged in the question, even though it's supposed to be the left hand side is debit side, while the right hand side is the credit side. So any item you see on the debit side is either an expense or it's an asset, while those one on the right hand side, which is the credit side, are income, liabilities, and capital in nature. So again, all elements on the right hand side of the trial balance are expenditure, which are capital or recurring. The recurrent expenditures are expenses in the income statement, while the capital expenditure is treated as assets in the balance sheet. On the other hand, on the other side are income and liabilities. Income are to be recorded in the income statement, while the capital and liabilities are to be recorded in the balance sheet. Generally, the mortgage business is a legal agreement, or mortgage is a legal agreement by which a business society lend money, a building society lend money at interest in exchange for taking title of the debtor's property, with the condition that the conveyance of title becomes void upon the payment of the debt. Now you see on the debit side, which is the left hand side, the first item there is loans on mortgages. So this is what? This is an expense. Then you have the next one, the mortgage balance, which is an asset. Then you have the director's fees and expenses is an expense. Office premises is an asset. Quoted investment is an asset. Legal expenses, valuation fees paid, expenses. Cash and bank and in hand, this is an asset, current asset. Staff salaries and expenses is an expense. Advertising expense, motor car an asset. Office accommodation and expenses is an expense. Interest on shares is an expense. Commission on agency fees is an expense. Office furniture and fittings assets. Interest on deposit and loans, and this is an expense, and unquoted investment is an asset. So one thing you should first do when you have a trial balance like this, to be able to separate the elements or the items in the trial balance into their various classes, either an expenditure, an income, capital, or liabilities, or an asset. So you have to be able to separate it. That will now inform you which of the items that will go into the income statement and those that will go into the balance sheet. So on the right hand side, which is the credit side, we have interest on mortgages. This is an income. Then we have general reserve, which is reserve like capital. Then we have deposits and loans. These are liabilities. These are deposits from members and loans taken from outsiders. So you have it as liabilities. Then profit on realization of investments. On realization of investments is an income. Rent from letting of office premises is an income. Interest and dividend from investments an income. We have insurance commission income. Other fees and fines to members is an income. Share accounts is like a capital account, so it's a capital. Bank's interest, this is an income to uh, the bank account. Then mortgage loss provision, any provision against any loss. If the loss is an expenditure, the provision against it is going to be treated like an income. It's going to have a credit balance. So other income received, an income, and provision for bonus. I just mentioned that any provision on an expense is going to be treated like an income until when that expenditure is actually paid. That's when it's going to knock it off from that side and it will go into bonus account. So if you total both sides, you have the same amount. So that's one of the check you first do. Like when you are given a question, when you have a trial balance, you should try and see if all the figures, the total of the figures on both sides are the same. That will be a good start point for you to know if the trial balance is balanced in itself. So from there, we proceed to the suggested question. The first thing is to prepare the income statement. Since we need the profit for the year to be added in the balance sheet, so we have to start from the income statement. So on the income statement, you see that the first item from your trial balance on the that you bring to the income statement is the interest of mortgage, because the mortgage is like the main business of the building society. So you have the first thing you have there that is coming here. If you check your credit side of the trial balance, you have interest on mortgages. So you bring it here, interest on mortgages, and you put it 165,812. Then you add any other income you can see from that credit side of your trial balance. If you look through, you have the next one is interest on investment and bank deposits. Here you have it as total 34,023. To see the workings, you go to note 1, and I will be explaining the notes later, so you can just refer to them. You have them in your study text, and I'm going to still share it to you. So we have other income. You add all this income together, and you have your total income. Then the next thing is to bring out the expenditure from the trial balance. So you have interest on shares, deposits, and loans, 172,965. This is note 3. Income tax on interest paid. You have them like that, and you check. You net it off from the interest on share, deposit, and loans. You have 116,970. Add your management expenses, depreciation, mortgage losses, and all that. All these items that are having shows that there are some additional information after the trial balance was prepared that you need to put into consideration before arriving at the figure for the year. So based on that, that's why we're having notes, and under the notes the calculations are shown here. So you have here you get at the end of the day, when you add and subtract all the subtractables and the addables, you have a surplus, a transfer to general reserve of 52,472. Now, this is the end of the income statement. The next thing is the balance sheet or the statement of financial position. Here, you still go back to your trial balance and look at those elements, those things that have not been taken care of in the income statement. All those other things will come into the balance sheet, and those things are going to be involve the liabilities on one side and the assets on the other side. So here the first thing we have is the shares account, which is 3,071,562. Then you have bank loans and overdraft. We don't have it in the trial balance, so that's why you see start. We're just using the same template as we have in the template for the account of the building society. So we just want to follow it that way so that you understand how it is. But normally, when you are preparing it, any of these elements or items that don't have a figure, you don't need to show it in the body of the reports. So we have deposit and loans not from bank 128,200. Anything you didn't see a note against it, that means it's the absolute the trial balance. Anyone you see a note, that means there are some adjustments that have been made based on the additional information given. So you have the total of from the capital and liabilities of 3,918,048. Then the assets, you have mortgages, you have investment and cash, you have non-current assets less depreciation, and you have other assets. So the total of it should equal. At the end of the day, you should have the same balance. So let's now give explanation of the notes so that you understand how these figures were. Notes to the accounts. The note 1, which is interest on investment and bank deposit. Interest before tax. If you look at your trial balance, you see interest and dividend from investment after deduction of tax. So after deduction of tax is 20,072. Then you have to add back the tax that has been deducted from it to actually know the amount that was gotten from there. So you have 33,452. Then since we have said interest on investment and bank deposits, so we want to add bank deposit to it. So the interest from bank deposit is bank interest, which is 571. If you add it together, you have 34,032. And if you check your statement or income statement, you see that this is the figure that was reflected there. Then the other incomes, we have other incomes that we lump them together. We have rental income. Looking at your credit side of the trial balance, you have rental income of 6,200 from the trial balance. While if you look at your additional information D, you see rent from letting of office premises 970. So you add it to that because this is an amount that is due but is not yet paid. All those amounts you see in the trial balance are those ones that have actually been paid. But at the end of the period, we realize that 970 was due to be received but has not been received yet. So the total amount that is supposed to have been received from rent is 7,170. That means the 6,200 has already been captured in the cash into the cash, while 970 has not been paid yet, so it will be captured in the balance sheet as other assets. Then you have insurance commission. From the trial balance, you have it as 1,456. From the additional information, you see on additional information B, 689. Oh, sorry, 556. Additional information D, you see 569. So the total will be 12,025 naira. Other fees and fines directly from the trial balance, you have 1,011 naira. Other income received, you have 3,482. The losses on mortgage received, 28. This is from the additional information where it's stated additional information E, taken into account in the losses on mortgage of 150 naira is 28 naira received in 1999 in respect of losses of written off in the earlier years. So they have written off these losses, but then it has actually received. So it's now received this year and it's going to be captured there as 28. So you have the total income, other income there as 13,716. Then the next thing is interest on share deposit and loans. You have interest on share deposit before tax, which is 112,735. You can do that from your 112,735. Say interest on share deposit instead of shares. Okay, these are expenses now. So you go to the debit side of your trial balance, you see 112,735 as interest on shares. So from the additional information now, we have a note that said in note F, it said income tax on shares interest is 53,695. It means that this income tax was actually deducted from the total income. So trying to get the actual interest on share that was paid is going to be, you add the 53,695 from additional information F to the 112,735 in the trial balance, and you get 166,430. The next one is interest on loan before tax. You have 4,235. Then from the additional information F, you get income tax on deposit interest 2,300. When you add it, you have 6,535. You add all together, you have 172,965. If you check under your expenses under the income statement, this is the amount you have as interest on share deposit and loans. Now the next item is income tax on interest paid. So you have if you go to additional information F, you have income tax on deposit interest, which is that's on loan. So it's 2,300. That's on loan. Then yes will be 53,695. The total of which is 55,995. So what we have done is to recapture the information, not the way that it was captured in the trial balance by netting it off. Now we want to see the aggregate amount for the amount interest on share deposit. Then we now recognize the taxes differently. So under additional information 3, you will see 53,695 added back to its source. Then the 22,300 was added back. Now we are now bringing it, adding them together to now net it off from the expenditure side in the income statement. Now the next item, which is note 5, is management expenses. Under that, we have directors' fees and expenses. We have legal expenses, valuation, and all that. So the directors' fees and expenses is 700 naira from the trial balance. Why in the additional information B we have 125. So you add it because it's still owing at the end of the period. So it means you're supposed to have paid 825 naira as directors' fees and expenses, but you only paid 700. So the 125 is still owing. It's going to be on the liability side of the balance sheet. So we have legal expenses from the trial balance. We have 100, while 52 is in the additional information B. So you are supposed to have paid 152 total, but you paid only 100 naira, 52 naira being owing, so it's still outstanding. It's going to be a liability to the business. The next item is valuation fees, which doesn't have any information. The total paid was for legal valuation fees is 3,390. The next item is salaries, which is 14,544. Advertisement is 612 paid and 689 unpaid from additional information B. So total of 1,301. Office accommodation and expenses, the total amount paid is 5,761. Commission and agency fee 1,066 naira. Audit fees 200 naira. All these from the trial balance direct. So the total management expenses is 27,239. The next item is depreciation. If you look at your additional information A, you have the depreciation rates, which is 5%, 15%, and 25%. So you take 5% off. How much is the lease? Go to your trial balance, you see office premises, including leasehold premises of 20,000. So 20,000 out of the total office premises is leasehold property. So 20% of 5% of 20,000 is 1,000. Office furniture 15% of 4,000 as shown in the trial balance is 6,600. Motor car, 25% of 2,400 is 600. So the total is 2,200. That is your total depreciation. And when you are representing your the assets in the trial balance in the balance sheet, you are going to total all the values of the assets less this 2,200 to get the written down value of the asset. Then we have taxation as note 7. Here we have company income tax of 200 and tax on interest and dividend of 13,380. So total is 17,580. The tax here, if you check additional information F, you see corporation tax on revenue account is 4,200. Then you have the other tax is from the tax on interest and dividend. Which can be seen, let's see, so we can give that later the explanation. I can't figure out now where that figure is from coming. Yeah. So the next one is taxation and other liabilities. This is a proposed company income tax for 2, tax on profits on investment 2,040 naira. Then you have other liabilities. The liabilities are as a result of all the expenses. Go to note 5, order the expenses, management expenses. You see 125 naira for director's fees not paid, 200 naira for audit fees not paid. Then you have 689 for advertisement and 52 for legal expenses. So generally, anything you see on the notes or the additional information are things that have not been taken care of in the trial balance, so you need to bring them in. So it's either it's a depreciation that you need to charge, or there are some expenses that you're supposed to have paid that you haven't paid, so they will definitely reflect in the balance sheet. Then, or some income that you ought to have received that you have not received yet, so it's going to reflect in the balance sheet. So I think that is next one is the general reserve. So you have balance brought forward of 157,608. If you look at your trial balance on the credit side, you see general expenses balance as opening balance, so which is 157,608. Now, from your income statement, we have calculated 52,472 as the income for the year. So the total amount to be taken into the balance sheet as general reserve is going to be 210,080 naira. Then the last additional information is 10. The last note is note 10, which is on investment and cash. So your investment value, if you check your investment here in the trial balance, you see quoted investment 896,788. Then you have an unquoted investment of 206,636. You add them together, you have 1,100,424. Then the cash and at bank and in hand, from the trial balance you have 70,872. Then in the additional information, it was stated under note E, taking into account in the losses of mortgages of 150 naira is 28 naira received. So it's an additional receipt that has been tucked into another. So from there you have 28. So the total is 70,900. When you add it to the other one, you have 1,171,324. So this is the whole of the calculation. If there's any question, you can contact me. WhatsApp, or you can make a call, or through the Vigilant